Happy Friday to you, everyone. And I'm so excited to welcome you to another promising session as we head into the last trading day of the week. It has been a wonderful 24 hours as we were able to scoop some profit in a couple of the instruments that we have been monitoring since the beginning of the week, and we are going to be looking at that in details. So today being the last trading day of the week, this day is has a lot of psychological peculiarity about being the last trading day of the week and the last trading day of the month. And most importantly, majority will have actually been in a particular direction since the beginning of the week, or who have taken advantage of an instrument at a very cheap price, will at this day like this want to be doing some profit taking activity by taking off some of their position, closing in some positions to make some profit ahead of the weekend. And with this kind of expectation, there is a very high chance that we could be having price action move in the opposite direction on some of the pairs that we have been monitoring since the beginning of the week, and we actually going to be taking all this into consideration as we monitor the chart and then review the chart too as well. If you can see my screen and you can hear my voice, please, I would like to get some feedback so that I know that we're on the same page, so that I don't talk into thin hair. So let me know right in the comment section if you can hear me clearly, and if not, let me be able to do some adjustment to my audio quality before we dive in. So with that being said here, the first thing we normally do, you all know what we do, is to review, have a look at the economic calendar to keep tabs with the fundamental event. And for today, we do not have any high impact macroeconomic event affecting the instruments we are monitoring. That is the GBP, that's the pound sterling, the US dollar, and the Japanese yen. Though we had a couple of features from the Japanese economic docket earlier this morning, and we actually expected that Ueda, who is the new president of their central bank, decided to leave the ultra easy policy settings unchanged earlier before today, and it was actually the same. As we can see here, that the interest rate still remained the same at minus 0.1%, which actually had affected the US dollar, sorry, the USD Japanese yen very positively during the early hours of today. We are going to be looking at that too as well. Then later on today, we have features from the Euro economic docket and the Germany economic docket and the euro, but since we are not monitoring any pairs on this one, so we are going to be skipping that. So in that regard, let's dive right into the charts. Akshay Amin, good morning to you. Thank you very much for that confirmation. So with that being said here, let's dive right into the charts at this point. And as usual, the first commodity we are going to be looking at today is the US oil. And one thing we've observed here in the last 24 hours is that price action has still been a little bit choppy on the US oil, as you can see here. So this was what our expectation was during the live session yesterday, where we had this whole channel figured out between the $74.65 level and the $74 area to give us a clue into the indecision in that market. And you all know what we look out for whenever we have this kind of simple setup. We want to see price action either break out of that resistant line of the channel for buying opportunity, or the breakdown of the support line of the channel for selling opportunity. And it was not until the later part of the New York session yesterday where we begin to see some bullish traction, and I quickly updated this before I went to bed yesterday, I guess. Let's look at the commentaries on my TradingView platform so that we can actually be on the same page together here. So this is the US oil publication on my TradingView platform, and we have been monitoring this pair. This is our commentary. So we bought at the beginning of the week. We had some couple of profits there before the sell pressure began, and we were lucky enough to be part of that move as we rode the move all the way to the downside. And in fact, before the live session yesterday, the US oil happened to be the most profitable instrument on our watch list. At least we were able to scoop over 500 pips thereabout, and in fact we also had multiple entries as we continue to ride this bearish move all the way to the downside. So at this point in time during our live session yesterday, this was prior to the live session where we saw this whole consolidation phase happen within our TP target zone, which was identified at the beginning of the week. So we quickly map out the whole structure around that consolidation phase, and this gave us the simple setup you can see on your screen right now. And it was on the 15 minutes time frame that we got this whole setup identified. Then we had an opportunity to sell at one point. I think a couple of hours into the New York session, we had an opportunity to sell after price action broke down that key level at the $74.35 level, and at the same time it was a breakdown of that trend line that we identified within that channel. So we sold, and I told us all at this point that we should secure our sell position. So we definitely would have moved our stop loss to our entry points to secure this position, so that at a worst case scenario, if price action moves against us, we shall be getting out of that trade at break even. And that was exactly what happened. As you can see here, we saw how price action took us out of our sell position at break even. And I told us here that we are going to be returning back to status quo, as we are still going to be using that current setup as our guide. And then afterwards, later on in the New York session, I told us here that looking more bullish as bears appear to lose the momentum needed to break down the $74 area. So we were looking forward to the breakdown retest of that $74 area, but that did not happen. So the continued buy pressure around the $74 area was a clue that buyers are gradually gaining some momentum. So I told us all that we are going to be looking out for buying opportunity. And look, this is the illustration here which I illustrated. So right above the $74.65 level for buying opportunity, and the below the $74 area for selling opportunity. So as at this morning, we had a buy position running, and I told us all to secure the current position as we saw sell pressure resume in this market. And if you had moved your stop loss accordingly to lock in some profit or secure some position, you would have been taken out of that position right now, probably with a small profit or at break even in a worst case scenario. And the way things are looking right now, I'm of the opinion that price action might continue to the downside from this whole situation we are seeing right here. And let's run through how the week started for us on the US oil. As you can see, since the beginning of the week, price action has been bearish, and in fact we have a trend line which further emphasizes the strength of the sellers in this market. So after we connected a series of lower highs, we had this beautiful bearish trend line, which at every point in time has been respected throughout the course of the week, and also gave us the privilege of adding more position to our existing trade. And if we look at what has been happening in this market in the last 48 hours, we saw that as soon as price got into that $74 zone, we begin to see buy pressure. Price action transitioned into a consolidation phase, and with the look of things here, considering the candle that closed around this area in the form of a shooting star candle, it is a sign that sellers are still very present in this market, and the inability of buyers to break out of that trend line is another signal that sellers at this particular point is still very, very present in this market. So at this point, I will be suggesting that we look out for selling opportunities from this current structure, as we use the $74.65 level as a yardstick for trading activity. And for those who had sold below the $74.65 level at this point, well, kudos to you. I hope your stop loss is somewhere right above, around or below the $75.50 level, which will be dovetailing to about 75 pips thereabout as a stop loss. And let's see how price action will continue to the downside. And if you had missed out on that opportunity, well, I think we still have more chance to be part of this move. Now, to do this, I want to bring out my line chart, and then we connect the series of lower highs, higher lows in this market. So if we connect the series of higher lows, we have a trend line which we can use to actually monitor how we are going to be trading this for today. So when we bring back our candle charts, you can see that we have higher lows which has been connected here. So we have a trend line which shall be serving as a yardstick for trading activity today. So what this simply means is that if price action continues to trade below the trend line, we shall be looking out for selling opportunities at this point. And with the look of things right now, price action is currently trading around that trend line. So we would need some confirmation to be part of that trend move to the downside. So personally, let's have a sell stop order below the $74.35 level. That is, if you had missed the entry here at the $74.65 level, then we look out for more opportunities here. And in fact, this whole structure here has a tendency of giving us multiple entries in this market, as we also have another structure at the $74 level, which if price action breaks down the structure, then we are going to massively go in for a sell position in this market. So let's continue to monitor price action at this point in time, and let's see how we are going to be playing out on this one. And in addition to what I just said here, remember we have this bearish trend line, which has been our trend line since the beginning of the week. So as long as price action remains below the trend line, we shall feel comfortable in our sell position. And remember, presently we are still within our potential TP target zone, which we identified at the beginning of the week. And for the sake of clarity, let's go into the 4 hours time frame so that we can see what it looks like from an higher time frame. Now, this is the old structure here. Remember, this was our TP target zone that we identified on Monday, where we said we are looking forward to a retracement into the structure. So we have a zone between the $75 level and the $70.50 level. And if a quick reminder of how we got to this point, we took into consideration the impulsive move that started during the later part of the month of March, and we saw this whole situation here as a potential retracement of that impulse leg. And we used our Fibonacci retracement tool to project where the retracement phase could end before another wave of bullish momentum will happen in this market. So when we bring out our Fibonacci retracement tool, we ran it through the previous impulse leg, and what we did was to aim within our golden zone area, which is always between the 50 and the 78.6% of that previous impulse leg. And that is how we got that zone that we are in right now. And one peculiar thing about this zone is that at any point in time when we begin to see buy pressure resume within this area, that is probably a reversal pattern in the form of a double bottom structure, head and shoulder pattern, whichever case it may be, we shall be getting ready to join another wave of bullish momentum to the upside. So we'll remain patient here and continue to look out for more selling opportunities, and let's see how far this retracement phase is going to go. We have a very wide range, wide zone of TP target for the sellers here, which is between the $75 level and the $70.50 level. So it's about $50.50 range around this area. So let's see how price action plays out at this point. Now, some of us will be asking that what are the potentials of buying the US oil for today? Well, if we look at the structure closely, back to the 1 hour time frame, and remember we already have a trend line which we said is going to be serving as our yardstick for trading activity. And considering the fact that price is within our TP target zone that we identified on the 4 hours time frame earlier, and we also mentioned that that area also is going to be serving as a potential buy window if we start seeing any reversal pattern within that area. So since we are within that zone, the potential of a reversal pattern too can also be considered at this point. But we need a confirmation that will give us a clue that buyers are really strong in this market. So since we have a trend line already which has been supporting or pushing this bearish momentum since the beginning of the week, then definitely a breach of this trend line will give us an insight into a potential momentum shift. So if at any point in time today we cite a situation where price breaks out of that trend line, then at this point we shall be seeing this as a signal that buyers are gradually gaining some momentum. But remember, we are not getting too excited at that point. As you all know, we've been bearish since the beginning of the week, and a breakout of the trend line could actually turn out to be a false one. So we need some confirmation that will buttress that sellers are finally gained some momentum some buyers have finally gained momentum in this market. So what we want to see reflect on the chart, if price action ever breaks out of that trend line, is a retracement into structure, like a retest of the structure, appearance of buy pressure on our lower time frame, then we could be in to join the move to the upside. And in fact, we have a very strong psychological area around that area, which happens to be at the $75 level, which could be a criteria upon which we could look out for a buying opportunity around that area. So for the sake of clarity, I will just label this out so that we can see things, and then if possible munch my screen so that you can use it as a reference point when you're about to make your individual decision. So as you can see here, the $75 level also shares a beautiful confluence with that bearish trend line. So if at any point in time price action breaks out of the trend line, the $75 level would have been broken out. And I told us all that we are not getting too excited, as we still need some confirmation to happen here, which will come in the form of a retest of structure. Buy pressure resumes around or above this level on our lower time frame, then we can join that move to the upside. So this is the only scenario that will see us buy the US oil for today. And considering the fact that price has been bearish since the beginning of the week, there is still a likelihood that price action could go bullish at any point. So we want to also be on standby on that one. And like I told you earlier, talking about the psychological expectations when it comes to the last trading day of the week, last trading day of the month, majority who are taking advantage of a massive move at the beginning of the week will want to be doing some profit taking activity as we get into the weekend, and this could result in a situation where price action will move in the opposite direction of where price action has been going since the beginning of the week. So let's keep this in mind too as well. So at this point we have a sell position running. Let's see how far this will go. But if at any point in time we are taken out of our position, then we know that above the trend line is an area we are looking out for buying opportunity. So let's keep this in mind while we continue to monitor price action, and be rest assured that I will be with you in my TradingView and Telegram platform to give you an update, as I've always been doing in the last couple of weeks, months on the TradingView platform, and couple of weeks on the Telegram platform. So let's see how price action plays out here, and I will be giving you an update in that regard. And for those who are joining us for the first time, you can see the lettering scrolling at the bottom of your screen. That is the IDs to my Telegram and the TradingView platform, so that you can join in and be part of our community. So that is that on the US oil. If you do have any questions, feel free to drop your inquiries in the comment section, and trust me, I will take my time to read them and answer your questions appropriately. So with that being said, here I will be moving on to the next pair. I can see Kwaku Anim. How are you doing, Kwaku Anim? Trust you are doing well. Any updates on the Telegram channel? I'm not sure I understand what you mean by that. Any update on the Telegram channel? I'm not sure I understand. I would appreciate you rephrase it and let me know. Thank you. So we are moving on to the next pair right now, and the next pair we are looking at is the GBP USD. And on the GBP USD, like we all said yesterday, we have been in a choppy situation since the beginning of the week, as we have seen how price action had continued to trade, or let me say trapped, between the 1.25060 level and the 1.24100 area since the beginning of this week, hereby giving us a clue into the indecision in this market. Though we had some buying opportunity at one point, we had some selling opportunities at some other point in time during the course of the week, but this position didn't last long before we were taken out at the respective entry points, or probably wherever we had moved our stop loss to. Though we had a simple channel identified at the beginning of the week where we saw price action trapped within the 1.24100 level and the 1.24550 area. And with this whole situation, whenever we have this kind of flat channel, you all know what we look out for. We want to see price action either break out of that channel or break down of the channel for trading opportunity. And with a buy stop order above the resistance point line here, we had our first buy position for the week, and in fact we rode the move all the way to the upside. I think we had about 60 pips thereabout before the sell pressure began in this market, breaking down that trend line, which also gave us another opportunity to sell as we rode the move all the way to this area, which also gave us about 60-70 pips thereabout before the bullish momentum began here. Now, when we look at this whole structure, first of all, we saw our price action has actually been bullish since the beginning of the week before the breakdown of that trend line happened. So what we did at the beginning of the week was to connect the series of higher lows, which gave us this couple of trend lines that you can see on your screen right now. Then on Tuesday, we had a breakdown of the trend line, which negated the bullish momentum in that market. And you all know from a technical standpoint, whenever price action breaks down a key trend line like this or structure, we expect that one point in time, price action will come back, retest that structure to inside a bearish move. And as you can see, in the last 48-72 hours in this market, that trend line had continued to reject any bullish momentum, giving us a clue of the presence of sellers in this market. And in addition to this, if I bring down all the structures here, one thing you will notice here is that despite the fact that we have been bullish since the beginning of the week, you will see that as soon as price gets into the structure, you will see how difficult it is for the buyers to break out of the zone right within the 1.25060 level and the 1.24850, giving us a sign of a strong presence of sellers at this particular point in time. And if we consider the selling pressure around this area, it is a sign that sellers might likely take over this market, and we might see a huge crash to the downside as the week comes to an end. So in that regard, yesterday we identified a simple setup which we were using to guide our trading activity, and we had that on a new chart. I think we did that on a 15 minutes time frame. I think, let me see. Okay, so it was on a 15 minutes time frame we identified the structure. So we had this old channel figured out yesterday where price action was within this channel, and then we saw the breakout of the structure, which didn't last long. We bought at that point. Actually, price action moved about 20 pips, didn't last long. I told us all to secure the buy position. As you can see here, let's run through the public platform quickly. Let's see GBPUSD. Okay, so here we are on the GBPUSD. So this is what we talked about at the yesterday is 27th, right? So we are going right into on the 27th, and this 26. Okay, so here we are, 27, and this was exactly after our live session yesterday where we identified the simple setup. We had a trend line, then we had a simple channel between the 1.24850 level and the 1.24600 area where price action was trapped during the early hours of yesterday, and we were looking forward to either a breakout or breakdown of that channel. So during the what's it called, during the GDP data release yesterday, we saw a volatility in the market, so we needed to allow the market to normalize before we want to be putting in any position at this point. So I told us all volatility kicks in following the below expectation GDP data. And during the later part of the New York session yesterday, I made this update here where I said buying pressure resumes as sellers found it difficult to break down the 1.24400 level. So I said a breakout retest of the 1.24850 welcomes the buying opportunity, and that is that level around this area, which actually was triggered, and price action moved about how many pips was that? About 20 pips thereabouts as at this morning, and we were taking out. I told us here to secure the sell position, the buy position rather, and we were taking out as at this morning. So this was my update on this pair this morning. I said the buy position was taken out as selling pressure resumes around the 1.25100 area. So let's go back into the live chart here and let's look at things again from an holistic point of view. So we have the 45 minutes time frame here, and acknowledging the fact that that area around the 1.25100 level has been a strong selling niche since the beginning of the week. It's a very good sign that we might likely be seeing a bearish move. And if we look at this, what happened in the last couple of days here, we had this whole rejection here. At this point during the early hours of today, we can see how it's so difficult for the buyers to find a new high. So this is the highest point price action has been for this week, and at this point we can see that price action is yet to find a new high at this point, further emphasizing the strength of the sellers in this market. So let me delete this one as it's no longer needed. So with this whole situation here, so we have something like an M pattern, which is like a double top structure. So we have this one, we have this one, where the 1.24400 level will probably serve as a potential neckline of this reversal pattern if it breaks down that structure. Now with this whole situation here and with the update I shared this morning, you must have been in a sell position right now, currently running with about 28 pips in profit. So if you had entered at the below the 1.24850, you definitely want to be moving your stop loss right now to lock in some profit. Move your stop loss to your entry point, and let's see how this is going to play out. Then if you had missed that one too, we also had another opportunity to join at the 1.24600 level, which is currently running with about 2 pips profit anyways, and our stop loss for this one should not exceed anywhere around that 1.249 area, which is about 30 pips. Let's give room for price action to breathe around this area. Then we also have another potential entry at the 1.2440 level, which if price action breaks down this level, then we might be in for a massive move to the downside. So let's keep in mind all these possibilities in this market. So for today, it's looking very bearish, so we continue to look out for more opportunity to add more sell position to our existing trade in this market. But trust me, I will be with you in the comment section on my public platform to give you updates if there are any changes in this market. Now, if we are considering buying the GBPUSD at this point, I will advise you to remain very, very patient here as things are looking very, very bearish in this market. And after considering the nature of the sell pressure around the 1.25100 level, I will advise you to hold on to any bullish expectation in this market. However, if price action at any point in time during the New York session or the London session today breaks out of that supply zone, that is taking out all the sell positions in this market, then at that point we want to be seeing that as a bullish signal that is likely going to be inciting a very strong move to the upside. And if we are lucky enough, we might likely see price action do a retest of the structure, whereby pressure above this level on our lower time frame will give us more opportunity to add more position to our existing trade. So to buy the GBPUSD today, we only need a breakout of the 1.25251 area to be part of that move to the upside. So if this does not happen at this point, we are not considering buying the GBPUSD. So for today, I'm still holding on to a bearish bias. As long as price action remains below the supply zone, will remain bearish. Look out for more opportunities to add more position to our existing trade. So that is that on the GBPUSD. If you do have any questions, feel free to let me know right in the comment section, and trust me, I'll be willing to be of help in that regard. I see comments. Kwakuamin, sorry, I do not know it's been set up already. What's the link? Okay, just check the link, the details in the that is scrolling at the bottom of your screen. You will see the IDs to my public platforms there. You will see for the trading view, you will see for the Telegram. Just type it in, search for me on Telegram, and you will find me there. Please do that. Miraculous Meditation, good morning to you. I like that name, Miraculous. Trust you are doing well, and glad to have you around with us. All right, with that being said here, let's move right into the next pair. And the next pair we are going to be looking at is the XAUUSD. XAUUSD was one of our profitable trade yesterday, as we were able to scoop over 200 pips on this one. So what did we see here yesterday that made us to sell the XAUUSD? Now, we were able to identify a simple setup on the 50 minutes time frame prior to the New York session and prior to the GDP data on yesterday. And this was what we found. Hold on a second. Let's zoom into the structure we were using to guide our trading activity yesterday. So this is what we saw here during our live session yesterday. Was it our live session yesterday? I think our live session yesterday, or is it the live session I had in the afternoon? Okay, I shared the link on my public platform for those who are not part of that session. I shared this yesterday, where we identified the simple setup on the 50 minutes time frame, where we continue to see selling pressure come in between that $2,002 mark and our very important key level that was serving as our yardstick for trading activity since the beginning of this week. So the continued selling pressure around that area was a sign for us that sellers are likely going to be coming in. So we had a channel here where we were looking forward to a breakdown of that support line of the channel had the 1,998 to be able to join that bearish move to the downside. But we also mentioned here yesterday that we might likely be joining the sell momentum even before the breakdown of that $1,998 level happens. And what I said here is, we look at a breakdown of the trend line, price retest structure, then we can join that decline to the downside. So this is what we were looking out for yesterday, and this was exactly what happened during the New York session, especially after the GDP data came in, as we saw how the dollar gained a whole lot of traction, hereby giving us about 230 pips in profit on this one as price action hit our TP target. And for those who are part of this move yesterday, well done to you guys, and kudos to you for being on standby to have caught this trading opportunity. So with that being said here, what is going to be our plans as we get prepared for the London and the New York session today? Well, first thing is this. One thing I noticed here, hold on a second. Okay. So one thing I noticed on the 15 minutes time frame, which caught my attention, was this old setup we had here. And hold on a second. I think I had, okay. Okay, this is it right here. So since the breakdown of that, since the bearish engulfing move that started yesterday, we saw that as soon as price got into that psychological level at the 1,975, we saw this move to the upside here. Now, hold on a second. I want to, let's acknowledge this bearish moment. Okay. Okay, this is it right here. So I would want to make this a green color as it's very confusing at this point. Okay, so this is what we saw here. So in the last 48 hours in this market, price action has been bearish. As you can see, we have a trend line after we connected a series of lower heights. So we have the major trend line and we have the temporary trend line here. So let me give you a visual representation of what I'm talking about. So this is the lower highs here. We have a trend line. Then this another one here. We have a trend line here which has been respected in the last 48 hours in this market. And then another thing here is the breakdown of this bullish trend line. Remember, since the beginning of this week, price action has been bullish in this market. We had this old higher low of a thing identified connected to give us that bullish trend line, and during that impulsive bearish move to the downside during the New York session yesterday, we saw that move break down that trend line too as well to give us a signal that sellers are getting stronger in this market. And we all know that from a technical standpoint, whenever we do have a breakdown of a key structure like this, we expect at one point in time price action will come back, retest that structure to incite a trend continuation to the downside. And with the look of things here and with what has been happening in this market since the later part of the New York session yesterday, we have been seeing selling pressure retesting that trend line that was broken, and at the same time it shares a confluence with the trend line that we identified here to further emphasize that we might be in for the second wave of the bearish momentum. So at this point in time, I shared this during the early hours of today that we should have a sell position triggered below the 1,985, and if you had done that, you will currently be running with about how many pips? 20 pips or so. And at this point, I would advise you to move your stop loss to break even right now, secure this current position, as we still need to monitor how price action will be reacting to the structure. And why have I said this? Now look at this old structure here after price action tested the 1,975. This is it here. And we have begun to see some buy pressure resume around the 1,981, giving us a clue that we could have a higher low in this market. So one thing could happen here, bullish momentum could come in at any point in time to break out of that trend line to the upside, hereby giving us a momentum shift that could lead into another wave of bullish momentum. So we need to be very, very careful, as this point here had the 1,981 is a very critical area where we still need some confirmation in the form of a breakdown of this level, selling pressure below this area to give us that leverage to be part of a bearish move. And if another breakdown of the 1,975 happens today, then this will be a massive signal that we want to be going all in for a sell position today. So let's be on standby for this selling expectation in this market. Now, thinking of buying, like you all know what we do here, whenever we have a bias, we also want to take into consideration the potential of the opposite of what we have decided, so that whenever the opposite happens, we are not going to be caught in a dilemma of not knowing what to do. So if we have discussed this, we already know that if this whole situation changes at any point in time, we already have an idea of what to look out for so that we can take advantage of that move when it happens. So at this point, I'm not saying it is bullish at this point, but I'm just saying that if anything contrary to what our bearish expectation is happens, we want to be part of that move too as well. So based on this current market structure, what do we want to see here that will make us think of buying the XAUUSD today? Well, personally, what I want to see here is, first of all, acknowledging the fact that price action has been bearish in the last 48 hours, is these two trend lines that we have here. And as long as price action remains below this trend line, definitely a bearish momentum is still a very positive a possible potential in this market. So for us to buy at this point, I will need price action to break out of that trend line significantly well, and then at this point I will look out for a retest of structure to be part of that bullish momentum to the upside. However, the market could still give us an opportunity to join even before the breakout happen, and that is when we start seeing price action find higher highs and higher lows, something like this, higher highs and higher lows. Then we know that we are gradually moving into a bullish momentum. But rest assured, I will be with you in the comment section to give you an update if that kind of scenario happens, and I will let you know how to take advantage of that move. But at this point in time, we still remain bearish, looking forward to a breakdown of the 1981 and the 1975 for more trading opportunities in this market. So that is what we are going to be looking at on the XAUUSD today. If you have any questions, let me know in the comment section. So moving on to the last pair for today, which is the USDJPY, and this was the most profitable trade for us in the last 24 hours as we were able to scoop over 500 pips on this single move. And I want to first of all congratulate everyone who has been part of this move, as you were on standby to be able to take advantage of that move. And if you recall vividly what I've been mentioning about the 133.800 level since the beginning of the week, where I said this platform, if price action at any point in time breaks out or retest that 133.800, it will be a very beautiful opportunity for us to be part of a bullish move. And for the sake of those who are not part of our live session on Monday and Tuesday and Wednesday, let's run through the daily time frame to see how important the 133.800 level is. Now, this is what we saw here on the daily time frame at the beginning of the week, where we identified this whole accumulation phase, which lasted over a year. And at this point, we realized that this area is a very, very strong demand zone. As you can see here, since the month of April last year, we saw that at any point in time price action comes into that area, it's negated all sellers' attempt to break through that structure. The same thing also happened at the early part of this year when we saw the spring out from the structure, breaking out of that trend line for the first time in 3 to 4 months. And you know what we look out for whenever price action breaks out of a key structure like this. We expect that one point in time price will still come back to do a retest of that level, which coincidentally shares a beautiful confluence with that 131.00 level, which happens to be a very strong demand zone. And we saw how price action transitioned into a reversal pattern right here. And you all know what we do whenever we identify a potential reversal pattern. The next thing we want to be doing is to identify a neckline, which shall be serving as the platform upon which we are going to be buying and validating that reversal pattern. And that is where the 133.800 level comes in. So we identified the neckline at the 133.800. And prior to last week's trading session, we were part of this bullish move that broke out of the structure. Price action moved about 140 pips in our favor before it came back into the neckline to retest it. And during our live session yesterday, I told us all that price action still remains along this trend line, and the potential of a bullish momentum is still very possible here. And I told us all that we could have a buy stop order above the 133.800, and I hope you gave enough room for price action to breach so that you can be part of that move. And in fact, if you had missed out on the first opportunity, the market gave us a couple more opportunities to be part of that move to the upside. So it was a wonderful buy position for us yesterday. As you can see, price action moved about 200 pips right now, and for the fact that we had multiple entries, we had over 500 pips running in profit. So now that you see how important the 133.800 is, let's scale back down into the 1 hour time frame to see what we have been looking at since the beginning of the week and how we took advantage of that move. So right now you saw what happened during the New York session yesterday, we saw how price action broke out of the 133.800, breaking out of that trend line that we said we are going to be using to guide our trading activity for yesterday. And you all know what we expect whenever price action breaks out of a key structure like that. We expect that one point price will still come back, retest that structure, which it actually did during the Asian session, to incite that move to the upside. And remember, we had key structures identified at the 134.170, where we said we are going to be having buy stop orders. We have the 134.480 and the 135.00 area. All three areas, beautiful areas for us to be part of a bullish momentum. And in fact, we have 4 good positions running at this point in time. So well done, and congrats to everyone who has been part of this move as we continue to ride the move all the way to the upside. And right now, you all know what we want to be doing, especially for those who still have a buy position running right now. The next thing we want to be doing is to move our stop loss accordingly to lock in some profit. And the most appropriate area, I think, at this juncture in the market to lock in some profit here is an area between the 135.300 area, so that we can give room for price action to breathe, because there could still be the tendency where price goes to retrace back into some structure here before that move to the upside. So our TP target still remains within that zone at the 136.350 and the 136.00 area. So let's keep this in mind as we continue to monitor this price action at this point. And for those who had missed out on this opportunity, well, I would not be advising you to jump in front of a moving train right now, as we'll still need some confirmation to happen, which definitely, if the structure gives us something new to be able to be part of a move to the upside, I will be sharing it with you on my public platform, Telegram, and the TradingView platform. So at this point in time, there is still a chance that price could still retrace back into the structure, where the appearance of buy pressure could incite the trend continuation to the upside, or we could have a situation where price transitions into probably a bullish rectangular pattern around this area, breakout retest to incite a trend continuation to the upside. But I will be with you in the comment section on both my TradingView and my Telegram platform to give you an update on what I think will happen if the market presents a very interesting setups for us to trade. So it's on this note I want to wish you I want to draw the curtain today, and I want to wish you best of luck during the New York session today. And I wish you a wonderful weekend too, as well, as I look forward to seeing you right in the comment section on both my TradingView and Telegram platform as we continue to monitor price action. Do have a wonderful evening, everyone. Bye-bye.